Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The oil price and benchmark interest rates have both risen on the renewed tensions between the US and Iran. But first today, the IMF has updated its global economic forecasts, and they are virtually unchanged from the main release in April. They note the world's economy's stronger than expected resilience to the Iran war and robust AI-related investment. They see global growth coming in at 3% in 2026, with the 2027 growth outlook revised up marginally to 3.4% from 3.2%. Despite the slight upgrades, the IMF warned that risks remain tilted to the downside, and the full economic impact of elevated tensions, including the renewed US-Iran strikes, are still to be revealed. Global headline inflation is now expected to reach 4.7% in 2026, up from 4.1% in 2025, before easing back to 3.9% in 2027. Australia gets little mention in this update, except to note that its 2026 growth is forecast to come in at 1.9%, down 0.1%, and for 2027 at 1.7%, and that's unchanged. New Zealand gets no mention at all. For the US, it's 2.3% and 2.2% for the same 2 years, both unchanged. For China, it's 4.6% and 4.1%, marginally higher. For Japan, it's 0.6% and 0.7%, both unchanged. Malaysia was noted as a positive mover, where their economy is projected to grow at a rate of 4.7% in 2026, benefiting from data center activity and the upturn in the global technology cycle. US mortgage applications fell again last week, especially refinance applications, and US crude oil stocks actually rose last week with a modest gain, which ended a 10 consecutive string of declines. But their strategic oil reserves continue to fall at the same fast pace. The modest US consumer debt expansion recorded to April shrank to nothing in May, an unexpected weakness and a significant variation from the continued expansion expected. However, a one-month hesitation occurs occasionally, so we need to wait for the June release to know if this is a significant indicator. The big mover was a sharp fall in credit card debt and other revolving debt, also quite unexpected. The minutes of the June Fed meeting were released today, revealing that most officials broadly agreed they would need to raise interest rates if inflation remained elevated this year due to the war in the Middle East, tariffs, or strong demand from AI-driven investment boom. That included the new boss, Kevin Walsh. In Japan, their official sentiment survey of professionals recovered in June after 3 prior months of downbeat views. In Australia, rents are rising faster, especially house rents. The increase was both stronger than seasonal norms and relatively abrupt in some cities, pointing to a step change in pricing behaviour rather than the gradual tightening in market conditions. In a now somewhat dated update due to the renewed Middle East hot conflict, the New York Fed's Global Supply Chain Pressure Index eased back in June after its April and May spikes. Of course, with today's resumption by the US of its bombing of Iran, this is likely to flare up again in July. The US Treasury 10-year yield is now just on 4.56%, up 8 basis points from this time yesterday. And the price of gold has fallen to $4,067 an ounce, down $78 an ounce from yesterday. Silver is now at $58.50 an ounce, down $2.50 from yesterday. And oil prices are up $3 from yesterday, at just on $73.50 a barrel in the US, while the international Brent price is now just over $78 a barrel, and up $4. Hormuz transits have picked up sharply in a rush to get out despite the risks and renewed uncertainties, with 35 crude oil product tankers exiting over the past 24 hours, but only 16 entering for new loads. Interestingly, all this comes as attacks on ships in transit become daily events, so the rise in oil prices isn't surprising. Red Sea activity near Yemen has fallen again to even lower levels on added risk there too. The Kiwi dollar is up 10 basis points from yesterday at just on 57 US cents. Against the Aussie, we're up 30 basis points at 82.3 Australian cents. Against the euro, we're up 10 basis points at just on 49.9 euro cents. That all means our trade-weighted index starts today at just on 60.9, which is up 20 basis points from yesterday. And the Bitcoin price starts today at $62,052 and down 3.1% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and because tomorrow is a public holiday in New Zealand, Matariki, we'll do this again on Monday.